Hey,
Yo,
what's up,
love
man?
you.
How's it going?
Yo, what's up, man? How you doing?
Just a normal day. Profit on the back.
Yeah, man. Going to bed soon anyway. Going to bed soon anyway.
Here you can clearly see that it's been downtrending because it's had some trouble. You had MetaTrader 4 on your iPad though. A larger account that probably would have been a few $100s.
Dude, you've been making money today.
Oh, you
What?
saw that in the
I
group
saw your
chat?
story.
What's up, guys? Today we're going to be talking about fundamental analysis on the Forex market, what it is, how it works, and how to use it to your advantage to make profit. So fundamental analysis is basically the economic condition of the Forex market. And one of the things I like to use, there are going to be two tools that you use to do fundamental analysis with for the most part. You're going to use an economic calendar that shows you when economic news related to each country is coming out. And you can also use what's called a strength meter. Now, I was on Google quite some time ago looking up fundamental analysis and Forex strength, and I came across this website, livecharts.co.uk. And of course, now I use a different version of this same form of analysis as my favorite tool, which we can talk about later. But this website was my first introduction to currency strength. And as you can see here, each country has a different set of bar icons over top of it, indicating how strong that particular country is in the market. So the best way to think about it is to imagine each currency pair as a competition or a tug of war battle, if you will, between two countries. So for instance, over here on the left, we have GBP and Euro, which is the Great Britain pound, and the European Euro. The Great Britain pound is currently much stronger than the Euro. So with that relationship being the way it is, GBP being listed as the primary currency or the one over on the left-hand side, and Euro being the secondary currency or the one listed on the right-hand side, when the Great Britain pound is winning the battle or the Great Britain pound is stronger than the European Euro, because it's listed first, we can expect that price exchange number to rise, increase, or go up, which would mean we would be looking to enter buys because we're expecting an uptrend. Now, if this were only one bar or less bars in the euro, it would mean the Great Britain pound was weaker than the euro. We would be expecting a downtrend. So if we go back to the chart and look at the hourly, you can clearly see here that GBP euro has been trending up. The price has spiked over 300 pips in the last couple of days. And that's due to the fact that the Great Britain pound is stronger than the European euro. Now, the euro being listed second or on the right hand side of the pair, it actually has a counterclockwise effect on the price exchange. So the secondary country being weaker means that it's going to send the price up, just like the primary country being stronger. So if this were vice versa and the euro were stronger or winning against the Great Britain pound, it being secondary or listed here on that right hand side, we would be expecting a downtrend instead of an uptrend. But that's how you use the currency strength meter. And we're also going to take a look at the news events that come out that actually dictate how strong each country's currency is at each particular moment. But one thing that you always want to remember is that the strength of each currency or your economic data, as you can see here on the economic calendar, is going to dictate what happens with the price movement on the chart. So that's the reason why If you're trying to trade a candlestick pattern or you're using a technical indicator and you're following the signals it gives you, it's not always going to lead you in the right direction or always going to be right 100% of the time. That's because anything in the economic world could happen to change whatever's going on, change the current situation. So your economic data is always going to dictate what takes place on the chart, which is another reason why people say that indicators lag behind the price. The price only reacts to the fundamental data, and then the candlesticks and the indicators themselves react to the price action. So by starting with the fundamental data, it's the earliest way to gauge a shift or a change in the market. And we will either at the end of this video or a later dated video, we'll take a look at the strength meter that I use as my favorite tool, which gives me similar data but breaks it down in different time frames. So I'm not just looking at one overall view. You do want to break down the strength of each currency into particular time frames, just like you would on the chart when you're doing your technical analysis. But coming over here to the economic calendar is two websites that I like to use. One is myfxbook.com, and they also have an app that you can download for your phone to stay up to date with the news, which is one of the main reasons I like to use my FX book. But I also use Forex Factory, which is supposed to be one of the better news sites. If you look up best sources of economic news for Forex trading, Forex Factory is usually mentioned, and they do a really good job of making sure that they categorize the news the way it's supposed to be categorized. But to go over this and break it down so you understand, when you come to myfxbook.com and you open up the economic calendar, let's go ahead and look at next week since it's the weekend. You are going to have your date over here on the left-hand column. So this is when the news takes place. Right beside that is going to list how much time is left. And as you get closer, this will actually come down and show you how many hours, how many minutes, all the way down to how many seconds are left. So it counts down all the way to 0 as far as when that news releases. Now, the next column has a flag. Is going to show you exactly which country that news event is affecting. And then the next column has the title of the news, which you definitely want to pay attention to because there are tons of different news events that take place in the economic world. So for instance, different news events will have different effects on the price. Your speeches and your meetings don't have statistics, but most of the news that comes out is going to have statistics to let you know by the number whether it's good or bad news. And of course, good news strengthens a currency, bad news weakens a currency. Now, the reason you want to pay attention to the title is because if we have interest rates, for instance, if interest rates are higher than expected, that's actually good news for the currency, which would push the price up if it's primary and push it down if it's secondary or listed second. But unemployment rates, on the other hand, if unemployment rates are higher than expected, then of course that's bad news. So you need to know how the news affects the price in relation to whether it's data or what comes out in the aftermath of a speech or a meeting. So the next column is going to be your impact column. This is going to tell you how much of an impact the news should have on the price exchange. If it's listed low or green box, which we don't have any next week, most traders normally will ignore those articles. I might even just have this filter not to show me low because I ignore the low priority news events myself, it just being so many of them to keep up with. But medium impact, of course, would be a step above that. And then your high impact news events with the red folders will actually have the most effect on the price exchange. And these are the news events you want to avoid trading. If you don't have any experience with them, or if you're already in setups, you might want to exit trades if you have higher priority news events coming out for a country inside of a pair that you're trading. Or what you will want to do is wait for the news to come out and actually release, and then leverage yourself with a position to benefit off of the aftermath of that news. Like, for instance, we were looking at how the pound spiked up last week. If there would have been a news event high priority coming out for the pound last week before that happened, we would have known once the news released, it being interest rates, for instance, if it was higher than expected, that we could have expected that uptrend, and we just would have been looking for our buy signals. But you have your previous statistics, which is what that particular news event was the last time it came out. Your consensus in the middle is the prediction. And then once the news is released, the actual column will populate with the data. And if we look at last week, you can see how that third column is populated and the green check mark appears once the news comes out. And they even go a step further to highlight the data as green or red, green being good news and red being bad news. So you don't actually have to distinct the difference between what kind of news orders, but of course it's best to know what's going on. So if you see it coming again, you can know what to expect. And if you click on these news events, it will open up with a description and even show you what's been going on since it took place, or each time the news came out. And then over here on Forex Factory, we got a similar setup. You got what time the news comes out, the currency it's affecting, the impact folder, title of the news, and then actual is actually listed first. So this is going to populate once the news comes out. And then you have your forecast, which is the prediction for the news, and your previous over here. And you're going to click on this box in underneath the detail column to pull up what the news is and get extra details on it. What a lot of people actually try to do is set a trap on either side of the price. That way they'll catch a rapid movement once the price releases. And what I can tell you through experience is you definitely don't want to do that with the higher volatility pairs, because you can actually trigger both of your stop losses or just take a pretty substantial loss if the price makes a big move in one direction and then a very even more substantial move in the other direction. So definitely avoid double price trap trading the news with the high volatility pairs like gold. Trust me. Or it could have been the Brexit. Now, anytime there's an update with the Brexit, whether it be somebody going in or coming out of office, Parliament being suspended and whatnot, you're always going to get a large reaction with your GBP pairs. So definitely pay attention to the progress with the Brexit negotiations, because that's fundamental analysis as well. But that's how you use the economic calendar in conjunction with the strength meter. I'll be showing you which strength meter I like to use the most. But when you are able to combine your fundamental data with your technical analysis to make sure that whatever the order you're looking to enter in agrees with the economic data, you're going to put yourself in position to be in profitable trades more often if your positions agree with the economic data, because economic data dictates what happens on the charts. So just keep that in mind. You're going to be tipped off first with a shift on the meter or the release of a news event, and then the candles and the indicators will follow suit to give you confirmation that the price is actually headed in that direction. But I hope this video was helpful for you guys. Hope it wasn't too confusing. I try to break it down so anybody can understand it. If you guys have any questions at all on fundamental analysis, how the news works, what and what not to do when the news is happening, feel free to leave a comment below this video. I love answering questions and interacting with you guys in the comment section. Definitely subscribe to the channel and then hit the bell icon right beside the subscription box. That'll make sure that every time I upload a new video, you'll be one of the first people to get to see it because you'll receive a notification. And good luck with your trading next week. Hopefully this video will help you make some money once some news comes out in your favor. I appreciate your time, appreciate you watching. Take care.